First, though, it is the live stream heard round Wall Street today. The trader Keith Gill, better known as Roaring Kitty, on YouTube right now about his GameStop position. Getting ready for that. Dom Chu is monitoring all this for us, as he has been all day. The volume today, Dom, in trades has already been off the charts, as you know and have noted. What are you looking at here?
Well, I'm looking at it right now. To your point, Scott, I'm just checking the latest volume stats. It's about 160-some million shares that have already traded so far today, which makes it far and away, by a factor of like 5, 6, 7 times, bigger than the average stock on the New York Stock Exchange right now. Only GameStop and AMC are in that rarefied air with regard to the millions that they've traded so far today, above their normal trading volume. And just to give you an idea, over the past 30 trading days, the average daily volume for GameStop itself has been roughly 61 million shares. We've traded 160 million plus, and it's just about noon today so far. So that just tells you how much activity is swirling around this particular live stream heading up to it. Now, the things that we are watching, if you have not been paying attention so far, here's the crib sheet version of it. We have a stock move lower today after a big gain yesterday. The big gain yesterday was triggered because of this announcement that Roaring Kitty, Keith Gill, was going to have his first YouTube live stream in almost 4 years, certainly a little bit over 3 years at this point. The other big news that sent the stock higher was that this morning we got a surprise earnings announcement 4 days before it was expected to announce earnings, showing a steeper decline in revenues than expected, albeit on a smaller overall loss total on the bottom line. That particular news was coupled with a regulatory filing showing that they intended, GameStop, to sell an additional 75 million shares of stock on top of the 45 million that they already sold last month during the meme stock volatility. That is being attributed as the main factor for the drop in the stock today. Now, all of this is being lined up so that the live stream itself will be focused on intently, because at this point, Roaring Kitty, Keith Gill, has put screenshots, numerous of them out there, showing a massive position in both GameStop stock and options that at one point was valued at north of $500 million. We have not at CNBC independently verified the veracity, size, scale of that particular position, but the screenshots are what has driven all of the optimism around some of these shares. With that in mind, Scott and committee, we are going to be listening very intently, because there was no formal allusion to addressing GameStop, but this is what we totally expect. So we'll bring you the details, Scott, guys, as we know more here. We're watching that live stream intently. I'll send things back over to you.
Can't imagine what else would be addressed. What's remarkable to me, first and foremost here, is you said 160 million in terms of the volume of shares, because you said 80 million at 10 o'clock. So we're talking in the span of 2 hours, we've doubled the volume in shares traded in GameStop already. Dom, you've been around trading desks before. This ain't your first rodeo. That's incredible.
I've never seen anything like it. And just to kind of put it in context, on a full day, Scott, yesterday, when, at about just a little, maybe after 1 p.m. Eastern time, when news came out about this new live stream from Roaring Kitty, that triggered the massive 45% move that we saw at the closing bell. On a full day basis, the full number of shares traded, even after a massive catalyst like yesterday, was 172 million shares total. So we are approaching yesterday's massive full day total. And to your point, it's just about 4 minutes after noon today. I can't remember in my time in the markets on Wall Street or covering them in journalism ever seeing a phenomenon like this with GameStop, and certainly not one where the corporate actions and investor actions have lined up the way that they have from a story standpoint. It's something to behold, Scott.
I'm going to guess that Mr. Gill must know that our next guest is going to be joining us now, and that's Andrew Left of Citron Research. He's the executive editor. Why would he know? Because, Andrew, it's good to see you. Welcome back, because this is not your first rodeo here either. Obviously, you're a noted short seller, but you shorted this stock back in 2021, in which you had a 100% loss on that short.
I did have 100% loss. I was asked if I lost, and I said to the reporter, yes, 100% I lost. It was not 100% loss.
Oh, okay, I got you. Okay, so 100% you lost.
Yes.
And you said that an angry mob had harassed you. So I guess my first reaction was, when I saw that you were short again, I was like, again? Why?
I know.
Tell us.
I know. I mean, after my first marriage, I said I'll never do that again. And certainly I'm happy with the second. So sometimes you go back in. At the time, it was a situation. It wasn't a big trade. It's still not a big trade. It's not a big position. When the stock went higher, as a trader, I naturally sold some. The fundamentals don't match up to the stock price. And I think the dynamic is different this time than it was back in 2021. So, it was a decent trade. It's a small position. Now, it could go higher. Sure. Why not?
But I think what's remarkable to people is we know how, short sellers a few years ago fared when they went public, or at least it was found out who was short and by how much, and then they got run over. It's famously turned into a movie. So we all know how that story went. You described before an angry mob, those were the words that you used, harassing you over your short. They were said to they've ordered pizza to your house late at night. They hacked into your personal accounts. They texted threats against you.
What's amazing is they should be angry at I've never met shareholders that have Stockholm syndrome. You should be mad at me. I'm not the one with the revenue miss today. I'm not the one who issued more shares. I simply have a small short position in the stock. I think traders have evolved over the past 3 years from where they were and understand short selling and understand market dynamics. So I believe it's different this time all around. And I'm getting feedback from that. So, I know people wanted it to go higher, but I don't think that jihad that GameStop had around it, a lot of the luster's off. The roaring kitty premise is gone. As we know, the GameStop story is essentially zero now. The company's, going to be the value of its cash or even more than the cash or the hope of Ryan Cohen. That's all played out, and I think it'll play out in the markets. For me, it's a small position. If the stock went to 100 today, I'll still have a nice weekend with my family, and that's it. This is not the same as it was in 2021.
I understand. Other than the fact that you're public about it again, was there any thought to just stay quiet short?
Yes, there was. And it was a complete mistake. Someone called me. I think a reporter called me from Bloomberg, maybe. And they said, hey, did you see this GameStop move? I'm like, yeah, crazy. They said, what do you think? I said, yeah, I sold some. I just casually said that. And then I had lunch. And then 3 hours later, someone's like, you're short GameStop? I'm like, oh, here it is. Well, that's how. But it's a small position. And I think people will understand. I'm sure many retail traders are shorting it as well. You have to be cautious. Shorting's not for everyone. And the fundamentals don't match up with the stock, obviously.
You've raised questions, though, I know about certain aspects of this particular trade, the size of it, how much of it he's amassed, what he's worth, what the position's worth. Can you expand on some of your skepticism around the size of the trade? There are suggestions that somebody's got to be backing him. It can't be Gill alone. I know you've thought that yourself, correct?
I'm open to being wrong, but this does not pass the smell test. If he made, let's say, 40, 50 million on the original GameStop, which people thought, and then you pay half to the government, you pay 40% to the government, and then you would have to pay, and he just put a position on that's 200 million, where did he make the rest? If, in fact, he made himself 300 to 400 million over the past 3 years being long NVIDIA, I think he would have told someone. Or I think he would have just kept his mouth shut. To me, it just seems awkward. I don't know where he would get the $200 million or $160 million. We had to have made $300 million. It does something about it. Something that just doesn't smell right. I could be wrong. This is what I believe, but the regulators will find out. E-Trade will see any deposits into the account, and we'll know, I'm sure, in the next 3 weeks.
We're waiting for, obviously, the live stream to start. We had been looking at the homepage, if you will. It clearly hasn't started. Maybe he's listening to our interview now. Maybe he's hearing you cast doubt on him, on the trading, the company itself. I mean, if you could speak directly to him, what would you say?
What are you thinking about? I'm sure every trader that watches your show, retail trader, wishes they had $200 million that they can allocate properly, have some for speculation, and have some for better investments. And why are you leading people? Think about it. He bought his first share at $2 a share. Split adjusted right now, the stock is $100 a share. And his thesis has completely not played out. So I understand. He was very likable. Gill was a likable guy in 2021. He was that aw shucks kind of guy from his basement with a little investment. He was likable. And now he just seems to be not that same person. Not believing it.
There have also been some suggestions in some corners. I mean, the issue itself, I suppose, is better said, been raised about market manipulation possibilities. You've heard of certain platforms wondering if they should have him on their platform. How would you assess that very question? That we started this chapter of this story presumably with a drawing of somebody leaning in, and then the stock goes off to the races. So how would you address that issue?
I mean, he has a right. He, in my opinion, and I'm not an attorney, but if people want to buy based on that, I mean, Dogecoin has a market cap of 25 billion, I think, something like that. People have a right to speculate. He has the right to put that up. I think it's a bit negligent. It's weird that people would follow him before he puts up a premise just on following him. And I think when Buffett filed on Chubb, it was up like 2%, 3% that day. We're a nation of gamblers. We know that. And this is just an example. We're just nothing else to be said.
Yeah, I mean, I'm sure some are going to suggest that, it's rich to some respects that we're having a conversation about, possible market manipulation and what have you with a short seller who, with a group of short sellers, was said to be investigated by the feds for the issue.
In 20 years, I've never just put a stock without a reason behind it or a position. If I said it could be 2 lines, it could be 20 pages, could be 200 pages, why I believe a stock is. What makes this unique is he posted an unusually large position, and that's it. Okay, so is the size of the position meant to manipulate? I don't know. This is up to the lawyers of the justice. What I've done as a short seller is said, I'm short a stock, here's why I'm short a stock, or I'm long a stock, and here's why I'm long a stock. And hopefully, in the next half hour, we'll know why he believes GameStop is worth $15, $17 billion.
What is the latest, by the way, on that probe? I don't think we ever heard a culmination of it other than you were, my words, not anybody, looking over your shoulder, so to speak, wondering if they're ever going to come back and do anything about this probe that was hanging over you and some other short sellers.
Well, obviously, with anything, I can't discuss, I don't discuss any of that. It's not for me, it's for attorneys and for other people to discuss. I think what's important today is this whole nation's glued to this GameStop thing, and let's see if Keith Gill actually has the nuts on GameStop. Maybe he shows up with Elon Musk. Who knows? Maybe something he just has, maybe he has something. It'd be quite interesting to see.
Well, aren't you worried, or at least wondering, maybe that's better, maybe he and Ryan Cohen have something going on together in this name?
Well, if he has something with Ryan Cohen, that would be MNPI, and that would be illegal. But, it is what it is. I mean, Ryan Cohen's doing the right thing by selling stock. Why wouldn't he? Any CEO would sell stock. You're giving him free money. It's kind of more, I wish Eddie Lampert probably had this ability when he was running Sears to do this. I mean, it's amazing. People are giving him money for a pretty business that's almost in runoff. I mean, the business itself isn't worth anything, and they're just going to let him raise $3 billion. Why wouldn't he? Let him do his thing. Then when it all settles in and the stock gets absorbed and the kitty noise gets out, we'll see what the stock is worth. It's not going to be, we're not going to know at the end of this week or next week. Well, but in time, the market's a good machine.
Back to you for a minute. I can understand you don't want to discuss, the issue that was around you and some other short sellers. Are you still worried though about being charged in whatever probe was front and center a few years ago?
Scott, anyone who goes and puts their opinions out in the public should be worried. Not for any other reason, but as we're seeing right now, and people have talking about, there's very nebulous laws about people who comment on stocks. It's actually been front and center because of this Roaring Kitty situation. A lot of articles on it. What's legal, what's not illegal. All I know is one thing: everything I've ever done in my life, I believe to be ethical and legal, and that's the key thing that I have to say. I've never just putting up these big trades or these grandiose, bombastic things and try to get people to do things. That's never what Citron or Andrew Left has been about. It's thoughtful research for over 20 years.
Andrew, look, you've seen a lot of markets yourself, and You know, you've done well when, you know, on many of the bets you've made, and you've seen shorts go against you when the momentum is just too powerful to overcome. How do you assess this just broadly in the market scene right now about what you're witnessing?
We have a nation of gamblers. There's nothing wrong with that. GameStop has done nothing wrong. They filed accurate financials this morning. They're actually taking advantage of the market right now, of this move, by selling more stock. They're actually self-regulating whatever might be wrong in this market. Everything's just fine. The economy's great. The stock market's great. This is one particular stock that's caught the fascination. They made the stock into a motion picture. How many movies has part 2 been as good as part 1? Not many, but we'll see. This one, that's it. It's one particular stock. And the important part why you can't put this like Bitcoin is it's not a token. They have to report earnings. They can actually raise cash. They have filings. They have shareholders. So, you know, people want to go buy tokens. You can't confuse that with stocks.
Sure, but you understand when momentum kind of goes against you. Look, there was a time where you were short NVIDIA. I don't remember exactly when that was, but when you see NVIDIA do what it's doing now, you've got to have a hot take on that.
Yeah, well, my last call actually around 4 years ago was I was long NVIDIA. If I'd only just locked myself in my own trunk right there and forgot about it. It happens. You know, it's a great company, and people should be excited about the future of AI. And if they're overexcited, then they're overexcited. You know, and market is going to find its way. It's good that investors are trading NVIDIA. What's amazing is the amount of retail out there. What's happening? I mean, people are watching CNBC. People are using interactive brokers. Look at Robinhood. People are actually getting engaged. Now, the next step, if they become informed and engaged rather than just engaged.
Well, hopefully we're helping in that process to some degree. Andrew, stay with me. I'm gonna.
We're waiting for like waiting for Taylor Swift here. J. Pal.
Yeah, wait in the queue. Well, we're coming back with breaking news because the live stream has finally started. You can see that right there. About 28 or so minutes late, but nonetheless, it is underway. And we'll see exactly what's gonna happen there. Andrew Left's still standing by. We'll give you updates when they happen. You can judge for yourself what's going on your screen. So we do want to get an update on that live stream from Roaring Kitty, Keith Gill, his real name. Dom Chu has that for us. Dom, what's been happening? It doesn't seem like there's a lot of new, but nonetheless, what's going on?
So we're monitoring this, as you can see, kind of on the live stream right now. We're also keeping a close eye on the market action. We are in the middle of what appears to be the 13th, maybe, trading halt of the session so far. It looks like we just resumed trading again. So again, I think this is, by my count, I have to go back and check. It's a lot. It's 13 trading halts right now. The volume stands currently at just around, by my check, and I might be in a little lag because things are going so quickly, about 197 million shares have traded so far right now. And again, for context, over the course of the last 30 days, the average trading volume, even with the latest meme stock craze, has been roughly 61 million shares on a full day basis. To your point, Scott, we have heard a lot of commentary. He did talk a little bit about the beer he's drinking and what's going to happen with the NBA Finals early on in the session. But now, some of the maybe major, I guess, development, if you even want to call it that. He has not reiterated anything that he hasn't already said before, but he has expressed the overriding philosophy, I guess, if you will, that Ryan Cohen at the helm of GameStop is the person that can really turn this thing around. He's kind of reiterated some of those feelings about the potential to get things back on track. The shares have been on a steady slide since the live stream just began, again, 28 minutes late. We're currently down about 37%, but again, the volume is picking up on this. We will bring you anything more, but again, right now, it doesn't seem, Scott, like there's anything terribly new, and nor has he talked about what exactly he's going to do about the position, add to it, trade around it, reduce it, nothing like that. But as soon as that happens, of course, we'll tell you more.
Dom, I appreciate it, of course. And maybe the most significant new is merely the fact that he's talking about it. And he's talking about the power of the retail investor and the ability of that cohort to move stocks in a way that maybe hasn't happened all that often. as one specific cohort in one specific name. And that's interesting in and of itself. Andrew Left still with me, and I do want to get your last word. It's not like Gill here is, naive or blind to the challenges that exist at GameStop. And he says as much. What's the plan? That's a fair question. He says the legacy business is cutting costs and stabilizing, but it's about the future. Can they raise more money? He asks. I don't think 3 years is too long to wait for a turnaround. He talks about how unusual it is that retail traders are the ones leading a stock, right? Usually it's the professionals. It's the institutions. We all know that. We talk about them every day. People like you are the ones who are normally driving stock action, but now it's a cohort, once again, of retail investors. Can you just comment on the comments that he has made over the last few minutes?
Wow. Thank God you and Dominic both did a job describing what we've seen, because I wouldn't have the words. It's an insult to your viewers' ears. It's an insult to the market. I actually expected something more from him. So whatever my bar was with expectations, it was lower than the bar, and I wouldn't have had those professional words to describe it. This is a one-off stock. This is not representative of the market. Hopefully in a few days from now, we can start talking about NVIDIA again, or whatever other stocks actually mean something. This, let's just end today. And from what we've seen so far, there's no words.
I mean, aren't some of the points, though, that he makes? I don't know how deep people were expecting that his research on the name would be.
Okay, so here's what we have at the end. Here's what he's talking about. The company's going to have $3 billion in cash, right? And it's going to be a war. He's forgotten about the legacy business and the $3 billion cash with a market cap of maybe $15 billion, and it's going to be a war chest for Ryan Cohen to go out and do private equity or investing. And so I'm paying a 5 times multiple on cash, 5 times the value of your cash for Ryan Cohen in Ryan We Trust. That's his premise.
Maybe that'll be good enough. We'll have to see. And I guess we're not going to know. But we'll close the chapter on at least this conversation this time around. Andrew, I appreciate you being with us for the last 52 or so minutes, giving us your thoughts here on GameStop and what we're witnessing today. That was Andrew Left.
First, I'm glad to see Keith back online and creating content. Honestly, I can't help but laugh watching the host of CNBC react to his live stream. They have no idea how to interpret or comprehend what they're witnessing. I thought Andrew Left's comment was interesting when he claimed that everything he and Citron Research have ever done has been ethical. I guess that means he considers the smash and grab strategy to be ethical then. According to Bloomberg, Left thinks the smash and grab strategy is a good way to manage risk. The smash and grab strategy is when a firm establishes a short position in a company's stock, then publishes a horrible, scathing article about the company they are shorting, and then they cash out of their short position within 30 minutes of the article being published. In other words, they cash in on the panic that they themselves have caused at the expense of everyone else before anyone has time to verify or refute their claims. Is that ethical? I don't think so. If you are truly convinced that your thesis is true, then you shouldn't have to tell anyone. You should be confident enough in your analysis that you can simply keep your mouth shut and trade. But that's not what Left or Citron Research does. In fact, it appears to be quite the opposite. All of these posts are about GameStop, by the way. I'll let you decide. Regarding E-Trade, it is absolutely insane that a brokerage would even consider removing a client simply due to the position that clients holds and their presence on social media. It is utterly insane. If E-Trade removes Keith, I expect a mass exodus of individual investors leaving E-Trade for other alternatives. Keith, along with everyone else, should be allowed to speak freely, share their opinions, post their positions transparently for all to see, and post memes on social media. This situation not only has implications on the rights of individual investors, but it also has implications on Keith's First Amendment rights. At the end of the day, what individual investors want is simple, and nothing we're advocating for is beyond the realm of reason. Individual investors want a free, fair, and transparent stock market. We want large institutions to be held accountable for their actions. We want individual investors to have access to the same real-time data from exchanges' better private feeds, which is currently only available to the large firms on Wall Street. We want short sale data to be reported in real time. We want an end to excessive amounts of failures to deliver, and we want entities who fail to deliver on their obligations to be held accountable. We want an end to payment for order flow due to the insane conflicts of interest it creates. There's a reason why so many other countries have already banned it. We want the exchanges to be not-for-profit utilities as they once were. The exchanges becoming for-profit ventures has created so many conflicts of interest at the expense of individual investors. We want increased competition among market makers, and we want all of individual investors' orders to be routed directly to lit transparent exchanges rather than opaque alternative trading systems known as dark pools. Ultimately, it's simple. What we want is a stock market that offers a truly level playing field for all investors. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.